Question 1. Cyber risk landscape. What is the primary difference between first-party and third-party coverage in cyber insurance? A. First-party coverage protects a business from the risks posed by external parties, while third-party coverage covers the business's own risks. B. First-party coverage covers the policyholder's own loss due to a cyber incident, while third-party coverage protects the policyholder against claims made by others. C. First-party coverage only addresses data breaches, while third-party coverage covers business interruption. D. First-party coverage is only applicable to healthcare organizations, while third-party coverage applies to all other industries. Answer. B. Explanation. First-party coverage applies to losses or damages sustained directly by the insured entity as a result of a cyber event, such as data breaches, business interruption, and cyber extortion. Third-party coverage, on the other hand, addresses the claims made by clients, partners, or other third parties against the insured party for damages they may have caused, including privacy violations and legal liabilities. Option A is incorrect as it misdefines the types of coverage. Options C and D do not reflect the comprehensive nature of these coverages across industries. Question 2. Cyber insurance policy coverage. Scenario. Mr. Davis, the CEO of a small e-commerce business, receives a ransom demand after his company's data is encrypted by cyber criminals. The attackers threaten to release sensitive customer information unless they are paid. Which of the following coverages would be most appropriate for Mr. Davis's business to claim under a cyber insurance policy? A. Network security and privacy liability coverage. B. Cyber extortion coverage. C. Business interruption coverage. D. Data breach costs coverage. Answer. B. Explanation. Mr. Davis's situation directly involves a ransom demand, which falls under cyber extortion coverage designed to cover expenses related to responding to and mitigating a cyber extortion incident. This includes the ransom payment and associated costs like legal fees or public relations efforts. Network security and privacy liability coverage. They would address incidents related to third-party privacy violations, not directly related to ransom demands. Business interruption coverage. C is more focused on loss of income due to a cyber event and data breach costs coverage. D involves the costs of handling a breach but not ransom-related situations. Question 3. Cyber insurance underwriting process. When evaluating the underwriting of a cyber insurance policy, which of the following is the most important factor in determining the risk profile for an organization? A. The number of employees in the organization. B. The organization's history of cybersecurity incidents and loss prevention measures. C. The industry in which the organization operates. D. The company's size and geographic location. Answer. B. Explanation. The organization's history of cybersecurity incidents and loss prevention measures is crucial in the underwriting process because it helps assess the company's exposure to future cyber risks. Insurers rely heavily on historical data and implemented risk mitigation strategies to determine the likelihood of future claims. While the number of employees A and the industry C can be relevant, they are secondary compared to an organization's actual cybersecurity posture and measures. The company's size and geographic location D may influence certain pricing factors but do not directly determine the core risk factors for underwriting. Question 4. Cyber insurance policy coverage. Which of the following is not typically covered under a standard cyber insurance policy? A. Data breach costs. B. Legal fees related to defending against third-party claims. C. Physical damage to company hardware. D. Ransomware payments made to cyber criminals. Answer. C. Explanation. Physical damage to company hardware. C is typically not covered under a cyber insurance policy, as cyber policies are focused on digital and intangible losses such as data breaches, business interruption, and extortion events like ransomware. Data breach costs A, legal fees B, and ransomware payments D are all common coverages under such policies. Policies may exclude damage to physical assets, which is usually covered under general property or other specific types of insurance. Question 5. Cyber risk mitigation and prevention. Which of the following is the most effective initial strategy to reduce cyber risk for a business purchasing cyber insurance? A. Limiting the number of employee training programs. B. Enhancing network security through firewalls and encryption. C. Relying solely on cyber insurance to handle cyber risks. D. Disabling multi-factor authentication for cost savings. Answer. B. Explanation. enhancing network security through firewalls and encryption. B is the most effective strategy for reducing cyber risk as it strengthens the company's defenses against cyber attacks such as data breaches and hacking attempts. Cyber insurance can complement these efforts, but it cannot replace them. Employee training programs are important but should be part of a broader risk mitigation plan. Relying solely on cyber insurance, C, without implementing strong cybersecurity practices leaves the organization vulnerable. Disabling multi-factor authentication, D, would increase risk, not reduce it. Question 6. Legal and regulatory aspects under Indiana state law. What is the primary requirement for businesses when a data breach occurs that involves personal information? A. The business must notify the public within 60 days. B. The business must notify the State Attorney General and affected individuals within 45 days. C. The business must offer free credit monitoring to affected individuals for 1 year. D. The business must pay a fine to the state for every individual affected. Answer. B. Explanation. Indiana law mandates that when a data breach occurs involving personal information, the business must notify both the State Attorney General and affected individuals within 45 days. B. This timeline helps ensure timely protection for consumers and regulatory compliance. Option is incorrect, as the notification requirement is 45 days, not 60. Option C, while beneficial, is not a statutory requirement. Option D is incorrect, as there is no fine for each individual affected in Indiana's breach notification laws. Question 7. Cyber insurance underwriting process. Which of the following factors would most likely reduce the premium cost for a company seeking cyber insurance? A. The company has experienced multiple data breaches in the past year. B. The company regularly conducts cybersecurity audits and maintains up-to-date encryption. C. The company operates in an industry with high regulatory scrutiny. G. Healthcare. D. The company has an outdated incident response plan that has not been tested in over 5 years. Answer. B. Explanation. Regular cybersecurity audits and up-to-date encryption. B. Would most likely reduce the premium cost because these actions demonstrate that the company is actively managing and mitigating cyber risk, lowering its potential for future claims. Past data breaches would likely increase premiums due to the history of claims. Operating in a highly regulated industry, C, can increase premiums because the company may face more scrutiny and higher compliance costs. An outdated incident response plan, D, would suggest higher risk and thus likely result in higher premiums. Question 8. Cyber risk landscape. Which of the following is an example of social engineering fraud that could be covered by a cyber insurance policy? A. An employee unknowingly downloads malware after receiving a phishing email. B. A hacker breaches a database and steals sensitive customer data. C. A company suffers a distributed denial of service (DDoS) attack causing system downtime. D. A competitor hacks into the company's network and steals proprietary information. Answer A. Explanation. Social engineering fraud typically involves manipulating individuals into revealing confidential information, such as an employee being tricked into downloading malware after receiving a phishing email. This is an example of fraud through psychological manipulation. B, C, and D describe various types of cyber attacks, but they are not typically classified as social engineering. These are more related to hacking, DDoS attacks, and corporate espionage. Question 9. Cyber insurance pricing and policy structure. Which of the following factors does not directly affect the pricing of a cyber insurance policy? A. The company's claims history and loss experience. B. The company's industry and business size. C. The company's geographic location and local climate. D. The company's use of risk mitigation measures like firewalls and employee training. Answer. C. Explanation. The company's geographic location and local climate, C, generally do not impact the pricing of a cyber insurance policy, as cyber risk is primarily driven by technological and security factors rather than physical location or weather conditions. Claims history, A, industry and size, B, and risk mitigation measures, D, are all critical in determining policy costs because they directly impact the potential for future claims and the overall risk exposure of the company. Question 10. Emerging trends and challenges in cyber insurance. Which of the following emerging threats poses the greatest challenge to the future of cyber insurance? A. The rise of AI-driven cyber attacks targeting critical infrastructure. B. The increased use of blockchain technology for secure transactions. C. The growth of mobile payment systems with strong encryption. D. The widespread adoption of secure virtual private networks (VPS). Answer A. Explanation. AI-driven cyber attacks targeting critical infrastructure present a growing and sophisticated challenge to the future of cyber insurance. These types of attacks are difficult to predict and defend against due to their advanced nature, which creates uncertainty for insurers. While blockchain, B, mobile payment systems, C, and VPNs, D, may improve security, they do not pose the same level of emergent risk as AI-driven attacks, which are increasingly sophisticated and can exploit vulnerabilities in new ways. Question 11. Cyber insurance coverage and exclusions. Which of the following is most likely excluded from coverage under a standard cyber insurance policy? A. Loss of business income due to a cyber attack. B. Costs associated with restoring compromised data. C. Fines and penalties resulting from non-compliance with data protection regulations. D. Legal fees for defending against a data breach lawsuit. Answer C. Explanation. Fines and penalties resulting from non-compliance with data protection regulations C are generally excluded from most cyber insurance policies, as insurance typically does not cover punitive or regulatory fines. Loss of business income A. Costs associated with restoring data B. And legal fees D are common coverages under a cyber insurance policy, as they are directly related to the financial impact of a cyber event. Question 12. Cyber risk assessment. When performing a cyber risk assessment for a company, which of the following should be prioritized as part of identifying vulnerabilities? A. Identifying employees who have access to physical office spaces. B. Reviewing the company's use of external auditors for financial reporting. C. Evaluating the company's network security protocols and data storage practices. D. Assessing the company's public relations strategy. Answer C. Explanation. Evaluating the company's network security protocols and data storage practices. C. Should be prioritized in a cyber risk assessment, as these are directly related to the protection of sensitive data and the company's ability to defend against cyber threats, while employees' access to physical spaces A. and the use of auditors B. are important. They are not primary concerns in a cyber risk assessment. The public relations strategy D is also not a cybersecurity related concern. Question 13. Third-party risk in cyber insurance. Which of the following scenarios could expose a business to significant third-party cyber risk? A. An employee inadvertently sends confidential information to a client via email. B. A vendor's systems are breached, leading to a data leak of the company's customer data. C. A natural disaster destroys the company's data storage systems. D. The company's internal network is compromised by an employee's weak password. Answer B. Explanation. If a vendor's systems are breached B. and lead to a data leak involving the company's customer data, it exposes the business to significant third-party cyber risk. This type of risk arises from the actions or vulnerabilities of external parties, such as vendors, contractors, or service providers. Option involves an internal mistake by an employee. C is a physical disaster, and D is an internal security issue. Question 14. Cyber insurance policy limits. Which of the following would most likely cause a company to exceed its cyber insurance policy limits? A. A small-scale phishing attack targeting a few employees. B. A large-scale ransomware attack that causes a company-wide data breach. C. An internal policy violation involving unauthorized access to data. D. An industry-wide cyber threat affecting all companies in a sector. Answer B. Explanation. A large-scale ransomware attack B. that causes a company-wide data breach would likely exceed a company's cyber insurance policy limits due to the high costs involved in responding to the attack, restoring data, paying ransom demands, and managing business interruption. A phishing attack A. may be limited in scope. An internal policy violation C. would likely be contained, and an industry-wide threat D. does not necessarily affect an individual company's coverage unless it results in specific claims. Question 15. Data protection requirements. Which of the following actions most effectively helps a company comply with the General Data Protection Regulation (GDPR) when handling personal data? A. Limiting access to personal data based on the employee's job role and responsibilities. B. Ensuring all company employees sign a confidentiality agreement. C. Encrypting personal data before transmitting it via email. D. Allowing customers to opt out of data collection but not offering them data access. Answer A. Explanation. Limiting access to personal data based on job role and responsibilities is a key requirement of GDPR for ensuring that only authorized individuals can access personal data, thus reducing the risk of data breaches. Confidentiality agreements B are useful but not specifically required by GDPR. Encrypting data C is a best practice, but access control is a higher priority for compliance. Allowing customers to opt out of data collection without offering access D violates GDPR's principles of transparency and data subject rights. Question 16. Social engineering and fraud. Which of the following actions would most likely help a business reduce its exposure to social engineering attacks? A. Installing an advanced firewall and intrusion detection system. B. Conducting regular employee cybersecurity awareness training. C. Offering financial incentives to customers for data security tips. D. Using artificial intelligence to automate customer service responses. Answer B. Explanation. Regular employee cybersecurity awareness training B is the most effective way to reduce exposure to social engineering attacks, as employees are often the targets of such attacks. Training helps employees recognize phishing emails, phone scams, and other fraudulent activities, while firewalls and AID help with technical security. They do not directly address social engineering threats. Financial incentives for data security tips C are unlikely to effectively reduce social engineering risk. Question 17. Incident response plan in cyber insurance. Which of the following would not be considered a critical component of a company's incident response plan for handling a cyber attack? A. A list of legal, technical, and communication contacts. B. A predefined list of cybersecurity vendors for incident remediation. C. An action plan for communicating with affected customers and regulators. D. A strategy for minimizing physical damage to the company's office building. Answer D. Explanation. A strategy for minimizing physical damage to the company's office building. D is not typically part of an incident response plan for cyber attacks. An incident response plan focuses on managing the digital aspects of a cyber attack, such as communicating with affected customers, handling legal implications, and involving technical vendors for remediation. Options A, B, and C are all critical components of a comprehensive incident response plan for cyber incidents. Question 18. Cyber insurance coverage and limits. Which of the following would most likely not be covered under a typical cyber liability insurance policy? A. Data breach notification expenses. B. Costs for restoring stolen digital assets. C. Cyber extortion payments. D. Employee wages for downtime caused by a cyber attack. Answer D. Explanation. Employee wages for downtime caused by a cyber attack D are typically not covered under a cyber liability insurance policy. Policies usually cover the costs related to breach notification, restoring stolen data, and ransom payments in case of cyber extortion. Coverage for downtime or loss of income is usually more relevant in business interruption insurance. Question 19. Ransomware coverage in cyber insurance. A company suffers a ransomware attack and the cybercriminal demands a ransom payment to restore access to encrypted files. Under which of the following conditions would the cyber insurance policy most likely cover the ransom payment? A. The ransom payment is under the policy's coverage limits. B. The attack involves government-issued malware. C. The company voluntarily pays the ransom without notifying the insurer. D. The company pays the ransom in cryptocurrency without following proper procedures. Answer A. Explanation. The cyber insurance policy would likely cover the ransom payment as long as it falls within the policy's coverage limits and complies with the insurer's conditions. If the ransom is paid without notifying the insurer, C, or following proper procedures, D, the policy may not cover the payment. The involvement of government-issued malware, B, is not a determining factor for coverage under most policies. Question 20. Business interruption coverage. Which of the following scenarios would most likely trigger a business interruption claim under a cyber insurance policy? A. A cyber attack prevents customers from accessing the company's website for several hours. B. A hacker installs malware on the company's internal network without affecting operations. C. An employee accidentally deletes important files on the server. D. A natural disaster causes physical damage to the company's data center. Answer A. Explanation. A cyber attack that prevents customers from accessing the company's website for several hours could trigger a business interruption claim, as it would impact the company's revenue generating ability. While the malware B may cause long-term damage, it would not necessarily interrupt business activities in the short term. employers, C, and natural disasters, D, fall outside the scope of cyber insurance policies as they would typically be covered under property insurance. Question 21. Third-party liability in cyber insurance. A third-party vendor breaches the personal data of your customers stored on their systems. Your company faces a lawsuit for the data breach. Which of the following would most likely cover the legal fees and settlements? A, your company's property insurance policy. B, a cyber insurance policy with third-party liability coverage. C, a general liability insurance policy. D, a workers' compensation policy. Answer: B. Explanation: a cyber insurance policy with third-party liability coverage. B. Would cover legal fees, settlements, and damages resulting from a data breach caused by a vendor. Property insurance: a general liability. C. And workers' compensation. D. Policies typically do not cover the liabilities associated with cyber incidents or third-party data breaches. Question 22. Cybersecurity risk mitigation. Which of the following actions would be most effective in reducing the risk of a successful cyber attack against a company? A. Increasing the company's cyber insurance coverage. B. Implementing multi-factor authentication (MFA) for all employees. C. Regularly changing the company's physical office locks. D. Investing in an advanced firewall system for the company's servers. Answer: B. Explanation: implementing multi-factor authentication (MFA) B is one of the most effective measures to prevent unauthorized access and mitigate the risk of cyber attacks, while firewalls (D) and cyber insurance coverage (A) are important. MFA directly strengthens access control, which is a critical vulnerability in many cyber attacks. Changing physical locks (C) does not address cyber risks. Question 23. Vendor management and cyber risk. Which of the following is an important practice to manage third-party cyber risks when working with external vendors? A. Ensure the vendor's cybersecurity policy is reviewed by an internal IT team. B. Rely solely on the vendor's own cybersecurity controls. C. Ensure the vendor uses the same cybersecurity software as your company. D. Require the vendor to have an insurance policy that covers data breaches. Answer A. Explanation: ensuring the vendor's cybersecurity policy is reviewed by your internal IT team is essential for managing third-party cyber risks. Companies should not solely rely on the vendor's controls, B, and should assess their own cyber risk exposure from third parties. It's important to require vendors to have an insurance policy, D, but reviewing their cybersecurity policy, A, provides proactive risk management. Question 24. Cyber insurance exclusions. Which of the following types of damage would most likely be excluded from a standard cyber insurance policy? A. Data breach caused by an employer. B. Damage to physical assets resulting from a cyber attack. C. Financial loss due to a third-party cyber attack. D. Business interruption caused by ransomware. Answer B. Explanation: damage to physical assets B resulting from a cyber attack is typically excluded from cyber insurance policies. These types of damages are usually covered under property insurance or business interruption policies. Cyber insurance policies focus on data breaches, financial losses, and third-party liabilities A, C, D. Question 25. Cyber insurance coverage for privacy violations under a cyber liability policy. Which of the following scenarios would likely trigger coverage for a privacy violation? A. A hacker gains unauthorized access to customer data stored on a cloud service. B. An employee accidentally sends confidential information to the wrong client. C. A system failure causes the company to lose customer records. D. A vendor is found to be non-compliant with data protection regulations. Answer A. Explanation: a hacker gaining unauthorized access to customer data A would likely trigger coverage for a privacy violation under a cyber liability policy as it involves the unauthorized disclosure or breach of private data. Employee errors. B. System failures. C. And vendor non-compliance. D. May lead to coverage under different insurance policies or exclusions in cyber insurance. Question 26. Cyber insurance for social engineering. Which of the following scenarios would most likely be covered under a cyber insurance policy with social engineering coverage? A. A company is tricked into transferring funds to a hacker impersonating a vendor. B. An employee mistakenly clicks on a phishing email and installs malware. C. A hacker breaches the company's server and steals sensitive customer information. D. A contractor damages the company's computer network while performing maintenance. Answer A. Explanation: Social engineering coverage would cover incidents like a company being tricked into transferring funds to a hacker impersonating a vendor. This type of coverage specifically addresses risks where fraudulent manipulation or deception is used to achieve a financial or data theft objective. Phishing attacks B and server breaches C are generally covered under other types of cyber insurance policies. Question 27. Claims and cyber insurance. If a company fails to notify their cyber insurance provider about a breach within the specified time frame, what could likely happen? A. The insurance provider could deny the claim. B. The insurance premiums would increase. C. The insurer would automatically cover the claim despite the late notification. D. The company would be subject to a fine from the insurer. Answer A. Explanation. If a company fails to notify the cyber insurance provider in a timely manner about a breach, the insurer could deny the claim due to failure to comply with policy conditions. Timely notification is a crucial requirement in most cyber insurance policies. While premiums may increase, B. The primary consequence is a denial of coverage. Question 28. Cyber risk for cloud providers. When selecting a cloud service provider for storing sensitive company data, which of the following considerations would most help mitigate cyber risks? A. Ensure the provider has a robust encryption process in place for data. B. Select the cloud provider based solely on cost effectiveness. C. Rely on the cloud provider's security measures alone without reviewing them. D. Avoid using any cloud providers with access to sensitive data. Answer A. Explanation. Ensuring that the cloud provider has a robust encryption process for storing sensitive data is a critical step in mitigating cyber risks. Cost effectiveness B. And relying solely on the provider's security. C. Are not sufficient. Avoiding cloud providers. D. Entirely would limit the flexibility and scalability of business operations, but ensuring strong encryption is a key measure. Question 29. Cyber insurance for network security. Which of the following network security practices would likely reduce the likelihood of a cyber attack that would require a claim on a cyber insurance policy? A. Ensuring all software is regularly updated and patched. B. Relying on default passwords for network devices. C. Sharing the company's network password with all employees. D. Using outdated antivirus software for network protection. Answer A. Explanation. Regularly updating and patching software is one of the most effective practices to reduce vulnerabilities that could be exploited in a cyber attack. Relying on default passwords. B. Sharing passwords. C. And using outdated antivirus software. D. Would increase the risk of a cyber attack, potentially leading to a claim under a cyber insurance policy. Question 30. Social media and cyber insurance. Which of the following actions by a company could lead to a cyber liability claim involving social media? A. An employee posts confidential company information on their personal social media account. B. The company shares information about its competitors on its official social media accounts. C. The company uses social media platforms to advertise its products and services. D. The company's social media pages are accessed through unsecured networks. Answer A. Explanation. An employee posting confidential company information on their personal social media account, they could lead to a cyber liability claim as it may constitute a data breach or privacy violation. Sharing competitor information B. May result in legal consequences, but is not primarily a cyber liability issue. The other scenarios C, D do not directly involve claims under cyber liability policies.